Hello and welcome. You're watching Ask PQ on Bloomberg Quint. I am Shraddha Babla.
And I'm Alex Matthew. Well, this is the perfect show for you if you've got questions on equity, and you can send them in to us on Twitter, Facebook, YouTube and WhatsApp. And you can also call us on 022-4540-4141. Alternatively, you can mail us on askbq@bloombergquint.com. Just make sure to add the AskBQ hashtag. Shraddha, I'm wearing blue here, light blue, because I'm a huge Argentina supporter.
Okay, I'm
not actually.
I'm not a football fan, so I am going to let that pass, Alex. And before we get to the individual queries, here's just a quick look at how the Indian markets are faring at this point in time. The Nifty has dropped below the 10,750 mark. The Sensex has lost about 0.3%. Both these indices at the day's low at this point in time, led by weakness in Asian markets in general. Broader markets, however, are underperforming. The mid-cap and the small-cap indices are seeing much sharper cuts. 1% taken off the Nifty mid-cap index. Over 2% for the small cap index. Also sharp losses seen on oil marketing companies, and you have a 3.5% correction on ICICI Bank. Both those factors weighing on the benchmark index, even as the IT majors are lending some support. So if you pull up some of the IT stocks, you have Tech Mahindra, HCL Technologies, Infosys, TCS, all of them are seeing gains between 1 to 3% as the rupee is nearing its all-time low, just about 30 paise away from its all-time low. So IT remains a lone sectoral gainer. EID Parry and CL Industries, Himmat Singh Seed are some of the top volume buzzers in trade, but overall the market breadth remains extremely weak, with the advanced decline ratio at 1:5.
All right, let's get our two experts of the day in. They are Sameet Chavan of Angel Broking, as well as Vikas Sethi of Sethi Finmart. Thank you so much, gentlemen, for joining us on the show. Let's take, so Ramesh is saying hi on YouTube to both of us. Thank you so much, Ramesh, and all of you who have joined in on YouTube and on Facebook. A lot of you have already written in your queries. I'm going to start with the one right on the top. Shiva Kumar, you're asking a couple of questions here. You've got a few stocks that you've listed out: LIC Housing Finance, India Bulls Housing Finance, DHFL, Repco, and you're asking what is the best stock to pick up over the next 10 years that you think, or that the expert will think is going to be a multi-bagger. Vikas, do you want to weigh in here? You can name a stock that is not in the list that I mentioned right now.
Yeah, Alex, housing finance as a sector looks pretty good, with the kind of opportunities which these companies would be having over the longer period of time, with the government's focus on housing through its various initiatives for affordable housing, like Housing for All by 2022 and the Smart Cities, 100 Smart Cities project. The sector looks promising, and within the sector, since he has a horizon of 10 years, he should bet with the topmost company in the sector, the best quality management, and I would go with an HDFC if he has a horizon of 10 years. So I would recommend him to buy into HDFC. He can start buying at the current levels and use a staggered approach to be accumulating this stock on every fall.
Right. Our next query comes from Abhishek Gupta. He has bought Jubilant FoodWorks at 1420, and he has bought it for intraday based trading. He wants to know if we should sell or wait for some more move. Currently the stock is trading at about 1408, and at the highest point in day it had gone up to as much as 1431. Sameet, intraday, what should he do?
In fact, in the morning we have asked our traders to book out Jubilant FoodWorks. Those who have bought it for intraday perspective somewhere around 1424. So 1430, according to us, should act as a very strong resistance, at least in the near term. Yes, overall it has been maintaining its sturdy structure, but for an intraday perspective, 1425, 1430 seems to be a very strong resistance. So in case if this stock gives a bounce back again towards 1420, 1425, that would be an exit opportunity. As of now, you can hold on, keep a strict stop loss below 1400.
All right, we're going to turn to Facebook now for a query. Ashish Malik is, no, wait, there was one before that. Abhishek Sharma is writing on Facebook and asking for a long-term view on Cochin Shipyard. When I take your name on Facebook, just hit the like button so I know you're there. All right, I'm going to take it to Vikas. Vikas, Cochin Shipyard, what's the long-term view?
Yeah, pretty good company. It has been a recent listing. The company does a lot of work for defense sector, which looks pretty good with the kind of focus which the government has on defense and the Make in India campaign of the government. So I think Cochin Shipyard would be a good stock to ride on from a long-term point of view. So my recommendation would be to hold on to the stock.
All right, Vivek Kanoja asks on YouTube the recommendation on Time Technoplast. He is holding 50 shares which he bought at 172. The stock right now trading at about 118, so he's seeing a significant loss on his holdings. He wants to know if he should hold, add or exit at the current levels. He wants to know if the management is good for the long term. He's betting on the company because he believes they are niche market players in the gas cylinder and fuel tank segment. Since it's a longer term call, Vikas, do you track this stock? This hit a fresh lifetime high of about 224 earlier this year, but has been languishing around or sub that 120 levels since then.
Yeah, Shraddha, I do track this stock. Fundamentally a good company. The stock has corrected sharply over the past few months, and that has mainly to do with the carnage being witnessed in mid and small cap stocks because of several reasons. It could be ASM, then SEBI reclassifying mutual fund schemes and things like that. So we are witnessing some selling pressure in mid caps and small caps, and I think that would continue for some more time. But then at the current levels, the stock looks good. Since the investor has a long-term horizon, I think he should hold on to the stock, and even he can consider buying into the stock at the current levels.
All right, we've got a question from Nikhil on YouTube on 3 stocks that he's listed. Suprajit Engineering, if we can pull up the stocks while I'm talking about them. Bought at 266, On Mobiles bought at 44, and Kaveri Seeds bought at 285. Sameet, he's asking for a short-term view. He's asking whether he should hold or sell. What is your recommendation?
See, as far as Suprajit Engineering concerned, this stock has broken down from its major support level after a long consolidation. So trend remains on the downside, and we would expect continuation of this downward move at least towards say 220, 210 over the next few weeks. So any bounce back from current level would be a good exit opportunity. Any bounce back say toward 260, 265 would be a good exit opportunity. As far as Kaveri Seeds is concerned, we have been quite upbeat on the stocks. A couple of weeks back there was a breakout from its recent hurdle of 540, 542, and if I just look at the volume activity, that has also picked up substantially. So that gives us conviction to go long or stay long at current level also. The stock has come off a bit in last 4-5 days, but according to us 540, 535 should act as a very strong support. So you can keep a stop loss below 530 on a closing basis, and we would expect a decent move again towards say 580, 590.
All right, our next viewer query comes from Krish, who is holding Kridan Infra at 99 rupees, and he has a long-term view. The stock, of course, currently is trading at about 73 or so. Now, this company makes a wide range of steel products, and we have seen sizable correction coming into some of the steel stocks. So Krish wants to know if he should average the stock, and if so, at what price. So he hasn't mentioned his view. Okay, sorry, he has said long term. So again, Vikas, Kridan Infra, does this really look good for the longer term?
Again, a similar kind of story. The stock looks promising. It was doing well, but with the selling which is being witnessed in mid caps, the stock has also cracked and has come down to levels of around 73, 74. But I think it's a good bet. I am bullish on the infrastructure sector as a whole, with government's focus on infrastructure, roads, housing, and it being an election year. I think infrastructure companies should do well once the monsoon season gets over. So I continue to remain bullish on the sector, and within this space I think Kridan Infra from the mid-cap infra space looks pretty good. So I would recommend a hold, and I think since he's bought it at a higher price, he could even average at the current levels and should hold it for a period of at least 1 year, when I think we could see substantial upside from the current levels.
All right, since we're on the topic of infrastructure, I was actually going to take this a little later and go with a technical question first, but a couple of our viewers are asking about KNR Constructions. Why is it down, first of all? Let's pull up the stock and see where it's trading right now. It's down about just under 4% in today's session. One viewer has bought at 270 levels for the long term. It's currently trading at 220 about. And another is asking whether this is the right entry point for the long term. Vikas, what's the view here on KNR Construction?
Yeah, Alex, again, KNR Construction is a good quality name within the infra space. There are few good companies within the space which have a pretty good balance sheet, pretty good order book, and KNR Construction remains one of them. So I like the stock. I continue to remain bullish on the same. The stock has corrected, again, the reasons being the same as far as infrastructure stocks are concerned and the markets are concerned. I would recommend a hold on the stock, and I would also recommend buy at the current levels if one has at least a year's horizon.
All right, our next question comes from YouTube viewer Melvin. He wants to know if Siemens is a good stock to enter at the current levels. That is for a 2 to 3 year view. So if you look at the stock, it's languishing at close to 2-year lows. He wants to know if it is good to enter at the current levels. Okay, so I would take that as a short-term query. Sameet, while he does have a long-term view, is it the right time to make a fresh entry into the stock, or even average for that matter?
Yes, but he should be, accumulating this stock in a staggered manner, since, the short-term trend remains on the downside. On the monthly chart, the stock is trading around its major support level, which is in the place, it's in the zone of say 960, 970. So from here on, any dip would be a good buying opportunity, but he should rather accumulate in a staggered manner. And once the stock surpasses 1050, we can term it as a short-term trend reversal, and in that case, the stock can resume its higher degree uptrend.
All right, Sanjeev Kumar on YouTube is asking about NBCC. Why is it down is what he's asking. Pull up the stock and see what it's trading. 73 rupees, down nearly 9% in trade today. Sanjeev has bought at an average price of 99, but he's bought a large number of shares. 24,000 shares is what he's bought for the long term. He's asking whether he should average at current levels. Vikas, what should be the strategy here? NBCC, first of all, if you can explain what the potential reason why the tide or the sentiment seems to have shifted for NBCC.
Yeah, Alex, as far as today is concerned, the stock is witnessing a huge fall, and I think that has to do with the pay hike which the company has approved. And I think the management was seen quoting that their margins would erode because of that. And so I think the stock has corrected today, but then I think it's a good quality company. The company has a sizable order book of more than 80,000 crores, and recently they acquired 2 loss-making units from government-owned units, and the order book would go up by another 15,000 crores. And I think they are serious about executing these orders. So at the current levels, the stock looks good. So my idea would be to buy into the stock at these beaten down levels and hold on for a year, 2 years, where I think we could see substantial upside from the current levels.
All right, we have a live viewer. He's calling us from Abhinav. He's calling us from Gurgaon. His name is Abhinav Sinha. Good afternoon, Abhinav. What is your question?
Good afternoon, Shraddha. Shraddha, my question is regarding HUDCO. I have around 425 shares at the rate of 72 rupees, and I'm holding them for more than a year now, and I can hold them for about next 2-3 years.
All right,
so what's the view here?
Right. Okay. So Abhinav, I'm assuming you bought it in the IPO, probably, since you're holding it for a year. You're making some losses here.
No. After the IPO, I bought at 82 also, and I bought at 66 also, I bought at 50 also. So average price is around 72.
All right. So you have, since you have a longer term holding period, Vikas, HUDCO has been one housing finance company which has underperformed some of its peers. Do you like this one? Do you see the stock coming back to those levels anytime soon?
Yes, again, a good quality stock, but the stock has not done well at all. And you've rightly pointed out that it has underperformed its peers also. But at the current levels, the stock looks good. It's a government-owned company which is primarily into institutional lending business. It's got a stable asset quality, low cost of funds, and good credit rating. And I see tremendous opportunities for the housing finance sector in view of the government's focus on affordable housing. So my recommendation would be to hold on to the stock. And I think he can further average the stock at the current levels of around 51, 52. And I think and should hold on to it for long term, where I see the stock going up from these levels.
All right, I see a new viewer here. I don't recognize your name, so I think you're logging on for the first time, or you're asking a question for the first time. Chiranjit Debanshi is asking for a one-year view on 3 stocks: Ashok Leyland, Sri Leather, and Advanced Enzyme. So I'm going to go across to Sameet for a view here: Ashok Leyland, Sri Leathers, and Advanced Enzyme. Sameet.
See, as far as Advanced Enzyme is concerned, this stock has been consolidating with a negative bias of late. If I just look at the volume activity, it has dried down a bit in last 2 to 3 months. So I don't see any encouraging sign as such, and overall I don't have the sufficient historical data to analyze also. If I have to see any momentum coming in this particular counter, then first it has to surpass 230 to 35, which has been acting as a very strong resistance. So if that happens, volume picks up, then the stock can head toward 260, 270. But as of now, I don't see any encouraging sign. The consolidation is likely to continue. As far as Ashok Leyland is concerned, we are quite a bit on this stock. If I have to just take it with a slightly broader view, any dip from current level, the stock has already come off quite a lot in last couple of months. So 125, 120 would be a good buying opportunity. It would offer a good risk to reward ratio around those levels. So one can start accumulating it from current level in a staggered manner up to say 125, 120 also.
All right. No view on Sri Leathers Limited. I see it's a 570 odd crore company. Market cap, it's currently trading at 230 odd levels.
But overall, if I just look at the average daily volumes, they are quite low. So okay, generally, we don't track this counter.
Okay, fair enough, fair enough.
Right. The next question is from Sumit Kushwaha. He wants a technical view on Indostar Capital and KNR Industries. Indostar Capital today, of course, is trading about 2% higher. That's after Morgan Stanley initiated coverage with overweight and a target price of 650. The stock, of course, is trading just about flattish right now. Since it's a shorter-term view, a technical view, Sameet, I would like you to come in on this one. Indostar Capital, what does it look like on the charts right now, and also KNR Industries for a fresh buy?
See, Shraddha, I'll not be able to comment on Indostar since it's a newly listed stock, and right, I don't have the sufficient historical data also. And I guess since inception, the stock has been correcting continuously. So as of now, I don't see any encouraging signs as such. And if this stock has to first pick any kind of momentum in the upward direction, it has to first surpass 565, 570s. So
fair enough.
Further, I'll not be able to comment on it. And as far as KNR Industry is concerned, this stock has been consolidating of late. The volumes have also dried down. Recently, there was a strong downtick in this counter from the levels of 480 and towards 380. It's a 200-day moving average. Since then, the stock has been consolidating. 440 is the level to watch out for in the upward direction. If the stock surpasses 440, we could see a good resumption of uptrend.
Vikas, do you like Indostar Capital?
Yeah, today one of the FIIs has come out with a bullish report and the stock is doing well. I think it's a good quality company within the NBFC space. So the current levels, I think, what could continue to hold on to the stock from a long-term point of view.
All right. I'm going to go to a question on Facebook now and then go back to YouTube. But Ashish Malik is asking for a one-year view on Escorts. And the context that he's providing and why he thinks it's going to be a good bet is that the monsoon prediction is above average. He bought at 890. The stock is currently trading around the 865 level. It's down about 1.9% in trade. Vikas, what's the view here? Escorts, or would you rather prefer something that is more diversified, say an M&M?
Yeah, if I were to choose between Escorts and M&M, I think at the current levels, M&M looks better. But Escorts also seem to be a good bet. It's a good quality stock and would be a beneficiary of the normal monsoon which we are expecting. The stock has done well over the last couple of years, and I think if he's willing to hold on to the stock for a year, I think he should see his price back and should be able to make some profits. But if one were to choose between the two, I would go with M&M.
All right, Ashish, I also would like to tell you that the monsoon prediction for this year is not above average. It's supposed to be a normal monsoon. So, but nevertheless, Escorts monsoons do fare well for
around 93% of long period average or 94%.
Which is considered normal.
Yeah, correct.
All right. We have a query from Sagar Reddy. He wants to know if it's the right time to buy Vedanta with a 1-year view. Sameet, how is Vedanta looking on the charts? Is it a good time to make a fresh entry right now, or you see some weakness coming?
Yes, some weakness is possible, but overall if you see since last 4-5 months, the entire metal stocks have corrected significantly from higher levels. But as far as Vedanta is concerned, we believe that the downside is now limited. Yes, the stock is under pressure since last few weeks, but we believe that any dip from current level, probably from current level up to say 210, 215, that seems to be a very strong support. So you can start accumulating this stock in a staggered manner. And according to us, 210, 205 should hold as a very strong support.
All right, Anup Sahu on YouTube is asking about ONGC. He's got, he's got the stock at around 190. It's currently trading significantly below his buy price at around 157. He's asking if this is the right time to average it. Vikas, can you provide us with an outlook on ONGC? How do you see it moving, and should he average at this point?
Alex, I feel ONGC should be sold. He should book his losses and get out of the stock. I would not recommend averaging ONGC at these levels also, because I think when crude prices go up and when this stock starts moving up, the government intervenes and then they make sure that the ONGC is not able to make supernormal profits by subsidizing the oil marketing companies and by doing all sorts of things. So it's a company which is dependent on government policies. So I do not like the stock from within the space. Even though crude prices go up, I think one would be better advised to get into an offshore drilling company which could give him much better returns from these levels.
All right, next set of question coming from Akash Kumar. He has bought 5,500 shares of LIC Housing Finance. He has a long-term view. His average buying price is 577, while the stock is trading at 475. In fact, it's only seen a one-way downward movement since early 2017. So should he average at the current levels? Because would you advise him to average at the current price? I'm asking you because he has a long-term view. So how does the stock look at the current valuations?
No, Shraddha, valuations could be good, but then this stock has been a laggard and has underperformed its peers. So I am not gung-ho about LIC Housing Finance. I like the sector, and from within the sector, I think he should switch to a stock like an Indiabulls Housing Finance or a Repco Home Finance, which look good at these levels. So my recommendation would be to sell LIC Housing Finance and switch to one of these stocks.
All right. A lot of you guys sometimes ask whether we've skipped your question. That's not true. We're picking questions at random so that we don't appear to favor anybody. Trust me, we're not. But let's take another question from Manikant, who's holding Viceroy Hotels at 15. He's bought a significant number of shares, 4,500, and is looking to hold for the next 6 months, he says, to overcome some of his losses. It's currently trading at 7.65 right now, down in trade about 0.5%. Sameet, what's the advice here? Again, it seems to be a case of someone buying into a stock because it's got a level of, say, double digits. So what would you advise them to do?
Yes, generally, such low ticket size counter looks quite attractive, but that's not the case. You have to see the overall, price-wise movement also, volume activity also. As far as charts are concerned, the stock is clearly underperforming, and since last many months the stock has been correcting. So I don't see any encouraging signs. According to me, any bounce back from current level would be an exit opportunity. So within hotel space, Indian Hotel is the one stock that we have been liking. This stock has been consolidating, but with a broader view, chart structure looks quite encouraging. It is trading around 130, so it is offering a good risk to reward ratio at current level. 130 to 125, according to us, would be a good buying opportunity. So if he wants, he can switch to Indian Hotels.
All right, we have a live caller, Ujjwal from Patna. Good afternoon, Ujjwal. What is your question?
Good afternoon, sir, ma'am, and Alex, sir.
Yeah.
Actually, I'm having UPL, United Phosphorus Limited, 35 shares at an average price of 790. I can hold it for at least 12 to 18 months. Can I average it right now, or shall I wait for more corrections? I want both short-term and long-term view on this, as well as in Reliance Industries also.
All right. So, Ujjwal, first we're going to get your query on UPL answered. Clearly, you're looking at sizable losses on that counter. It's down to 630 right now. Vikas, UPL from a long-term perspective?
Yes, Shraddha, the company is good. It has solid fundamentals, and the fertilizer sector is expected to do well in view of the normal monsoon which we are expecting. And UPL, being the leader in the sector, looks pretty good. He's bought it at a high price. The stock is corrected, sitting on some losses, but I think he need not worry. He should hold on to the stock from a long-term point of view, and I'm sure he would get back his price and also would be able to make some profits.
Sameet, very quickly, how is UPL looking on the charts then?
With the short-term view, looks weak. Recently, there was a breakdown, happening around say 690, 695, which has been acting as a very strong support. So we would expect continuation of this move. 600, 590, according to us, would be a short-term support level.
All right. What about Reliance, Sameet?
This stock has been correcting since last 3-4 days, which is quite evident after seeing massive rally from the levels of 920. So we would expect continuation of this move. So 950, 955, these are the levels to watch out for. If the stock comes around those levels, probably that becomes a good buying opportunity.
All right, I'm going to take one last quick query from Ananta Venkatakrishnan on Sterlite Tech is what he's asking about. He's asking for an opinion on Sterlite Tech. Let's pull up the stock. It's currently trading about 1% lower at 275. I'm going to assume you're asking for a short-term view because you want to enter the stock. So, Sameet, what's the view on Sterlite Tech? What is the chart telling you?
This stock has been correcting since last many months, so we would expect continuation of this corrective move. 260 is the level to watch out for. Once the stock slides below 260, the stock would be heading toward 240, 245. So we would avoid this counter as of now.
All right, then I hope that answers your questions, guys. Those were all the queries that we could take today. And on that note, we'll thank our guests. Thank you very much, Sameet and Vikas, for helping our viewers with all their queries. That's all that we have on this edition of Ask BQ.
But do remember, as always, we're just a tweet, post or call away, so do keep your queries coming in. We try as far as possible to answer them. I'm sure that some of the other queries that were answered on the show can help you. If you want to go through them, you can log on to the website bloombergquint.com and search for the hashtag AskBQ and get all the answers to the questions that were discussed today. Up next on Bloomberg Quint is Power Lunch, so do keep watching.